Welcome to the deep dive. We're here to unpack complex topics and hopefully make them really clear.
That's the goal.
Today, we're digging into an investment trend that's, well, it's quietly reshaping parts of the real estate world. Short-term rental clusters.
A fascinating area.
Yeah, so if you're an investor, or maybe you're just curious about how high net worth individuals operate, or, how tech is changing traditional assets, this deep dive is definitely for you.
We aim to make it a good use of your time.
Right. Our mission today is to really shed light on what these clusters are. Why are they becoming such a big deal for large-scale investors? We're talking ultra high net worth individuals, UHNWIs,
Hmm.
and also how cutting-edge tech, even things like cryptocurrency, are starting to play a part.
It's quite the mix.
It is. We're drawing on some great sources today. Insights from cluster investing and short-term rentals. Work by Dr. Pooyan Ghamari. He's a Swiss economist, founder of the A-Land platform.
Which is a key piece of this, that AI-driven platform for managing these kinds of portfolios.
Yeah. Exactly. And we'll also touch on tokenization through Gold, the digital asset platform. They're applying blockchain to fractional real estate.
Yeah, moving beyond just gold-backed stablecoins. It's interesting.
So let's frame this. Imagine an investor, let's call her Eleanor. Maybe she usually buys single luxury properties. How does this cluster idea change things for her?
Okay.
What exactly are these clusters, and why are they suddenly so, well, appealing, especially to someone like Eleanor and UHNWI wanting better returns with maybe less risk?
That's a great starting point. So at its core, short-term rental clusters,
Yeah.
it just means grouping multiple vacation properties together, managing them as one unit, basically.
Okay, not just scattered properties.
No, it's strategic. It's aggregated, designed specifically for UHNWIs who want that diversified, scalable real estate exposure.
Right.
And the big appeal, as Dr. Ghamari really points out, it boils down to economies of scale, significant ones.
How so? Like in practical terms?
Well, think about it. Managing 10 units clustered together versus 10 scattered across a region. You save a lot on marketing per property. Operational visits are way more efficient.
Ah, okay. One trip, multiple properties.
Exactly. One manager overseeing several units next door to each other. Or a single marketing campaign boosting the whole cluster.
Mm.
Dr. Ghamari's work suggests efficiency gains can be like 25–30% compared to scattered sites.
That's substantial.
It translates directly into higher net operating income, more predictable revenue too. So yeah, it's not just owning more, it's owning smarter, more efficiently, especially with travel changing how it is.
You mean the demand for specific kinds of stays?
Yeah, that growing global demand for
Yeah.
curated, flexible places to stay, these clusters fit that niche perfectly.
So the value isn't just volume, it's the synergy, the operational leverage you get from grouping them. That really highlights the smart part of smart ownership, doesn't it?
It really does. It's a paradigm shift.
Okay, beyond those internal efficiencies, what about bigger picture stuff like economic trends? Are there macro currents making this even more attractive right now for our investor, Eleanor?
Oh, absolutely. There's a convergence of a few powerful trends. You've still got rising urbanization influencing travel. You've got traveler preferences really shifting.
Towards unique places? Longer stays, maybe?
Exactly. Unique, flexible, sometimes longer-term spots. And then there are regulatory shifts. In many places, regulations are actually pushing for more professionalized, well-managed rental operations.
Which favors a bigger, organized player.
Precisely.
Hmm.
It all kind of tilts the field towards this cluster model, and we see it in the data. The Allen platform data, for instance, it clearly shows clustered portfolios tend to deliver better ROI.
Better returns.
Better returns, yeah, and less volatility compared to just investing in single properties here and there. Because bundling naturally spreads your risk, right, across different locations, different rules, different property types even.
Diversification built in.
Exactly. So for UHNW investors like Eleanor, who are often looking for resilient, consistent income streams, maybe less about chasing wild speculation.
More about capital preservation and steady income.
That's often a big part of it, and this diversification delivers that. You're less dependent on any single property doing well. It builds resilience.
I can definitely see the appeal there, especially for that kind of investor profile. But, okay, even with efficiencies, managing a cluster still sounds complex. What are some of the, non-obvious challenges?
That's a really good question.
And how does a platform like Dr. Ghamari's A-Land system actually tackle those specific hurdles beyond just the basics?
Right, it's a critical point,
Right.
and that's where the tech layer becomes so important. Ayland is built precisely to handle that complexity. It offers Full digital integration, property management, marketing, analytics, investor reporting, it's all connected.
Single dashboard view.
Pretty much. Real-time performance tracking across the whole cluster. So instead of wading through separate reports for each property, you get this unified view. It makes spotting trends or potential issues much faster.
That must boost investor confidence.
Hugely. And it simplifies decision-making. Plus, the platform uses, sophisticated digital marketing tools designed to target those high net worth tenants specifically, and it helps optimize pricing dynamically.
Adjusting rates based on demand.
Yeah, based on demand, seasonality, competitor moves, making sure you're maximizing yield across the whole portfolio, not just one unit. And it really does make you think, doesn't it? How much is technology truly transforming these old school industries like real estate?
It's a massive question. And it leads us straight into maybe the most cutting edge part of this whole thing, crypto and tokenization in these clusters.
The blockchain layer.
Yeah, blockchain. Specifically, we mentioned Gold's tokenization model. Now, you said it democratizes access, but we're still talking UHNWIs here. So how does it democratize anything if it's still for the elite?
That's a fair point, and maybe democratize needs clarification in this context.
Right, and how do you keep it exclusive while still breaking it into fractions? What does this mean for actually owning property?
Okay, good points. When we say democratize here, it's more about democratizing access to these specific high-value assets that were traditionally very hard to split up or trade easily.
Okay, so easier access within that group.
Kind of. Blockchain tech, like Gold's model, fundamentally changes how ownership works. Instead of owning, say, the whole villa, an UHNWI might hold tokenized shares of it. Digital tokens representing fractional ownership, all recorded securely on a blockchain.
So it gives them more flexibility.
Exactly. Unprecedented flexibility, really, to get in or out of an investment. Think about selling a 10% stake in a luxury property traditionally. It's slow, complex, expensive, very illiquid.
Nightmare.
Right. With tokenization, you fractionalize that ownership into digital tokens, like shares in a company but on a blockchain. Transfers can be almost instant. Transaction costs are way lower.
So real estate starts acting more like a stock.
It moves it much closer to that kind of liquidity. It cuts out a lot of the traditional friction deeds, lawyers, waiting periods. For elite investors, this opens up new ways to diversify. They get exposure to novel asset classes, but exclusivity can still be maintained.
How? By controlling the tokens.
Exactly. By controlling who can buy the tokens, how many are issued, the platforms they trade on. It's still a controlled environment. So this digital asset innovation, it really smooths out market friction, makes it more appealing for sophisticated investors seeking new diversification tools and, frankly, more agility in managing their portfolios.
Making real estate almost liquid. That's a huge shift for big investors. Okay, so for Eleanor or anyone thinking about this space, what are the absolute must-do strategic points for building and managing these clusters well?
Right, boiling it down. Based on the sources, there are really 5 key strategic takeaways.
Okay, let's hear them.
First, geographic diversification is non-negotiable. You have to spread the properties out to hedge against local risks.
Don't put all your rentals in one vacation hotspot.
Exactly. A new local rule, a bad hurricane season. If you're diversified, one area's dip doesn't sink the whole portfolio. It stabilizes your returns. Makes perfect sense.
Makes total sense. What's number 2?
Second, use data for pricing and marketing. Don't guess. Don't rely on gut feeling. Platforms like they use analytics to adjust pricing dynamically based on real demand, seasonality, what competitors are doing. You optimize revenue constantly.
Right. Data-driven decisions. And for operations, you mentioned tech integration.
Absolutely critical. So third, leverage platforms like Integrate all your operational data, your investor communications, seamlessly. Efficiency is the name of the game.
Real-time insights across the board.
Yes. Performance, maintenance needs, guest feedback, all in one place. Streamlines management, boosts transparency for the investors. It's huge.
Okay. And the cutting-edge stuff, tokenization.
Fourth point. Explore tokenization, maybe via a platform like Gold. It enhances liquidity, which is a massive plus, and it definitely attracts tech-savvy investors. It's not just a novelty, it's a structural advantage.
Flexibility to get in and out, big draw. And the 5th, you mentioned something less obvious earlier.
Yes. Number 5. Think about aligning the cluster's brand with cause-related initiatives. Boost that social responsibility appeal.
ESG for vacation rentals?
Sort of. In the high-end market, investors and even tenants care more and more about the values behind where they put their money or where they stay. Associating your cluster with, say, environmental sustainability or local community support, That can be a real differentiator, adds long-term value.
Fascinating. Okay, so geographic spread, data-driven decisions, integrated tech, exploring tokenization, and aligning with values.
That sums up the key strategic pillars.
And just like that, hopefully you, the listener, have a much clearer picture of short-term rental clusters. We've gone from the basic appeal, the operational side, right through to advanced digital tools and blockchain changing the game.
Yeah, trying to give you those aha moments on a complex topic.
Absolutely. This deep dive really aimed to equip you with that understanding quickly.
It really does make you think, though, looking at the bigger picture. If we connect all these dots,
Go on.
as real estate gets more digitized, more fractionalized, bundled up like this, what does that mean for the future? How might it reshape the whole idea of property ownership? Not just for the super wealthy, but maybe for everyone down the line.
That is a provocative thought to end on.
Okay.
How does ownership itself evolve? Fantastic. Thank you for joining us on this deep dive.
My pleasure.
Keep exploring how these financial innovations might just change the world around you.